morning, good morning, good morning, everybody. It is Wednesday. It is Thursday. It is Thursday. I apologize. It is Thursday. I'm wrong again. It's Thursday, October the 9th. It is 4 a.m., 4:05 a.m. over there on the East Coast. Don't forget to dust off your credit cards if anybody if that's the technology that's used today still. Tomorrow is going to be your big 10/10 sale. All the internet's going to be on sale for 10/10, so get ready for it. But let's get on with this and get it done quickly. Here we are with futures. Flat. Everything's flat. So nothing whatsoever to go and, start pointing fingers at over there. But kind of give a recap before we go forward, because again, yesterday, starting about 23 hours ago, I posted there in the spread room the SPX closes 11, 15, 15, 40, and 14. We'll call it 15, rounding up. And had your trades out for the day. You're fuck around, find out, pay me risk. Looking for that red close down below 67.14.59 to follow the historic trend of the year after multiple successions of 6 or greater green closes in a row. 67.25, 67.20 calls, they were $3 pre-market. And the safer risk trade being the 67.45, 67.40, $1.50 here, utilizing the data which we already accumulated, and that being 67.45, 67.40 because that was your highest close, 67.40, 6.28. For those around that want to go and seek and destroy, look for that $4 credit or better. Look at that 6705, 6700. Do your math for today, tomorrow, Friday, if you're going to go and spread it out. And as we got into closer to the open, just about 40 minutes before the open, the VIX was at 1706. And as I tried to type in the best possible English I could put together, hard to trust this as power remains with the bulls for now. And then about 5 minutes later, expect to see 67.34 for 67.45 if you're planning to be cautious. 2 o'clock, that had been scheduled for multiple weeks that they were going to issue the FOMC minutes. At 9 o'clock, I was there. I don't believe that we see 67.45, but I've got to throw out the life buoy in case the full credit yesterday creates a little bit of FOMO with anybody. 9:20. 60-40 advantage for the bulls, and that's 67.34 for 67.45. So fractionally better than Trump's approval rate. They were looking for the upside. And then we got our open, 67.23.87. Okay, we got our open. So now we got our pricing, our fuck around, find out, pay me risk, $3. And I shared with you, because of what was there, we had a 90% chance that we were going to see 67.33.86. Then just a few minutes later, because of the way the price action had been, a 40% chance that that's going to happen. 67.05, 6700, $4 fills, and there was plenty of $4 getting filled. Apple and NVIDIA, that was the reason why we were staying above 67.10 at the moment at 9:43 a.m. And then at 9:44, we want to see the VIX 1811. That's what we want to see. We want to see the VIX push to that 1811, and then it all fucking went to shit. Everything went to absolute shit. 10 o'clock, this fucking, I don't even know what to fucking call her, but she's had nothing but bad press in history. She's never once in her fucking life made an impact on the stock market. Never even once. And she comes out and says, Managing Director Georgieva, the global economy is faring better than feared, despite acute strains from multiple shocks. And bang! The fucking stick it right up your ass in the fucking prison shower. Uncertainty is exceptionally high and continues to climb. U.S. should take sustained action to address the federal deficit and incentivize household saving. China needs a fiscal structural package to boost private consumption, lower spending on industrial policy. IMS forex global growth at roughly 3% over medium term, down from 3.7% before the COVID-19 pandemic. I don't see anything positive. U.S. trade-weighted tariff rate now at 17.5%, down from 23% in April. The U.S. could see more price pass-through, pushing up inflation, and flood of goods can trigger tariff hikes elsewhere. Global public debt is projected to exceed 100% of GDP by 2029, led by advanced and emerging market economies. Rich and poor countries must consolidate fiscal spending, address excessive imbalances, and rebuild buffers. Once again, nothing whatsoever there that is bullish. And then her final comments that made highlights was the U.S. could see more price pass-through, push up inflation. Yeah, we already went through that. Global economy's resilience has not been fully tested, with the full effect of higher U.S. tariffs still to unfold. And then you come out here with sharp corrections in stock market valuations could drag down world growth, hitting developing countries hard. Once again, nothing positive at all. But the experts began pricing in multiple rate hikes for 2025. They have 19 rate hikes priced in for the end of 2025, the next 2.5 months, and then they have 48 rate cuts. They have 48 rate cuts priced in for 2026. So there's going to be 48 times where they're going to cut interest rates next year. And then at 2 o'clock, you get the FOMC minutes, and a few officials could have supported no rate cut in September. But most said it's likely appropriate to ease policy more this year. And there you have it. And that's why you got what you got. So let me get you onto the charts, because, again, where we're at on this absolutely just magical week, 66.93.23 from Monday, and the new all-time high by an additional 1 point. Let me make sure that this is being correct. 67.50.87, 67.49.52, 67.54.49, 67.55.64. Higher highs, high highs. And here we are with a 60-point range, call it. This is the week. This is 5 days. And your weekly candle being there at 67.33.86 with your unfilled gap from Tuesday being down here just below 67.15. Wider view, no, you're not ready for that. You couldn't handle that if I fed it to you on a spoon, you couldn't handle it. Again, all we're doing now is we're adjusting our price levels to the upside, and that being the bulls' first warning is 67.15. The bulls need to start worrying with a break below 67.05. The 20-day moving average will be just below 6,700 as we enter the trading session today, Thursday, October 9th. The bulls' final warning will remain over there at 66.40, which used to be the bulls' first warning. The bears start winning after a breakdown occurs below 66.27, with 66.03 confirming it. 65.32, 65.51, where the bears begin to take control. Your 50-day moving average, not seen here on the chart, but I am sure that it will be showing up somewhere in that range. And this block down here in red, the quote-unquote expected downside move for this corrective wave that we are still waiting to commence. Over on your QQQ, got nothing for you. 66.09.79. Okay, you blew through it. You blew all the way through it with the AI money laundering scheme that continues to take place, which any regular business in the United States doing that, they would have been in handcuffs 22 months ago. when it was discovered 24 months ago. Wider view on the QQQ. Once again, I don't think that you can handle this because I think it's a little bit too much for you, and you might actually start looking for plane tickets for some place that's tropical and deals with cash so that you don't have to worry about what's about to come. And here we are on the VIX, just hanging, 1622, 1706, 1622, 1706. We got to see that push above 1706, or you're just going to continue to have the same relatively small, everybody's an expert that does, what they put out, and it's got nothing to say with anything, but this is frustrating for everybody. Seasoned veterans, rookie traders, very consistent scalpers, gamma dedicators, chart followers. Everybody is getting frustrated with this range, and there's nothing that anybody is going to do about it until it satisfies what it's going to do, which the algorithm has on its own, and then you proceed to get your move, which, again, go back to 1997, which is, where we're still sitting here. Same thing with the 20-day moving average, consecutive streak of closing above, the dip below it, almost consistent to the date. Again, another streak of fractional breaks, closing above, and then coming into October for that little tiny dip. That little tiny dip, which is a decent dip, but a little tiny dip so that we could move forward and proceed. So I bring you back to where I've shared for you here in both the spread room and it will be in your email. This is where your risk is going to begin. For today and tomorrow, your risk begins at 67.60. Utilizing the 67.61 pivot that we've talked about for a little bit more than a week since we've now been up in this area. You can get better than $2 as of now if you want a 0 DTE. You can get $2.50 for tomorrow if you want to go out one day. If you want to look over at the 67.45, 67.40s, understanding where your weekly candle is for this week, 67.34, you have a $3.50 credit for 0 DTE today. You have the same $3.50 credit for your Friday, October 10th, if that's what you choose to do. I was being asked by a large number of people, you think it's a good time to get into some December QQQ puts? So I started answering, and I was typing the same answer into everybody. So I'll just share it here with everyone here that's able to watch. If you're going to go out on the QQQs December 19th, I would stick with something between 600 and 590. And to put a difference of your 600s, that's where your volume's at. You got 15,000 in volume. They're going to cost you a little bit less than $15. It's only $18 for the 610s. You're talking a $3 difference to protect your capital up here at 610. Now, granted, 610, we get down to 590. They're only worth $20, so your break-even's down here at 590. You're going to need to see that bigger, broader, wider view in order for these to actually make a difference. So let's get back onto that chart, which is coming up next. No, it's not. I already passed it. Your QQQ. So that you can't handle. But here's what we are looking at. And here, looking at here on a 15-day, 30-minute, 596 is still where my alarm is. You've got a tiny little gap from yesterday, right below 603.59, which 50% above your April lows. 588.50 being the lows from back here over on September 25th. So you zoom out on your QQQ chart a little bit wider, and that's where you come into your your September 2 bottom. Your September 2 bottom being down there at 560, which would be a very bullish dip. You'd still be 40% above your April lows. We're right at 567. We're right into the typical standard textbook dip. So from 610 or 600 down to 560, the math just simply works out. So make the decisions that you want to make. On the Dow Jones, it's horrible. I mean, horrible. But I can't share any of that with you because it's weak. It's Thursday. IWM, again, same thing. It's even worse than the Dow Jones, but can't share it with you because it's intra-week and nobody cares until it starts breaking down below 238. Until the IWM breaks below 238, nobody cares. Nobody. So your range is still your range. I'll put you on to your week to date so you can see the reality of it. 6,700, 6,755. Unfortunately, I am going to be a little bit busy tomorrow. So this is going to be your email for not only, well, I'll put out an email tomorrow, but I won't be able to do a video tomorrow, as I'll share with you here. This is your 1 hours on the SPX, where you can fractionally be able to clearly see a very embedded running cell divergence. And here is your, on the right, your 1 hour on the NDX, which is overbought. And you come in to your 4 hour charts, and you can just see this fucking absolutely disgusting cell divergence on your 4 hour, and it doesn't matter. And you come over to the NDX and you see the exact same, a little bit less aggressive, but getting very close to being overbought, cell divergence on your 4 hour. And again, doesn't really matter. And then you come over here to your dollar, Japanese yen, which is still well below 160. 160 is where you start seeing your yen apocalypse. But this has been an aggressive move with the new prime minister. And you see your dollar pushing back up here, trying to get back up into 100. Gold not pulling back whatsoever. And again, it all looks very much like 1997. So like I say, I won't be able to put out a video tomorrow. I'm going to be exhausted tomorrow because I am going to be digging holes all day tomorrow. And I'm unfortunately not going to be digging holes to be planting Carabao mango. I don't know if any of you have ever had these mangoes before. They are the most delicious mangoes on earth. And while we have 3 very, very mature trees on our property, I grafted with my bare hands, I grafted a dozen of them a little bit more than a year ago, and I've been taking care of them, waiting for the rainy season to take place this year. And we're essentially into it, but we're not getting the consistent rain daily yet. So I've been holding off. I've been holding off a little bit because, again, I want to have a food forest, is what I've designed for this, multiple hectare property with all the farm animals. That's what I've wanted, is a food forest. Well, my wife took them from me without my knowledge. I found out this morning, and she planted them on another property. Our property, but not the property that we live on. So I'm going to be digging holes so that I can, equally displace the body parts when I bury them. And, I'll have a beer afterwards, and I'll sing her a song.
Warm up.